have always stayed steady. And they're steady because they're not rate sensitive like the rest of the market is. You have seniors that are in a place that they may have a need. And so you look at a reverse mortgage not only as a need-based product where that client might be struggling to make their tax payments, their medical bills, whatever it may be, their retirement strategy is just not there yet. So you have equity in place to assist, and a reverse mortgage will help them there. You also have it as a financial tool and a strategy to assist seniors in their long-term retirement goals. So there's lots of ways to use a reverse mortgage with current equity in place. There's also ways to use a reverse mortgage as a purchase to increase purchasing power and other things of that nature. And we're going to go over the purchase aspect right now, and then we're going to cycle back and go into, how we can use it in other ways as well. So let's get into the purchase side of things right now.
All righty, thank you, Brad. And I'm not sure why this is not wanting to show as a slideshow. Let me see if I can figure this out. You're not seeing this as a slideshow, are you?
No, I just use your full PowerPoint.
Yeah, I'm trying to get this to go properly. And I apologize. I am going to try to get this going again. Give me just a moment here. I apologize for the delay. Let me see if I can figure this out.
While you're working on that, I'll discuss other scenarios that I've seen over the years. We've talked about, what happens to a reverse mortgage when the senior passes away. And as we hit on, a reverse mortgage is nothing more than a regular loan. It just has options of a no payment option, right? So the senior does get a mortgage coupon each month. They get a coupon each month that breaks down what the interest is, and they have the right to make a payment on that interest or interest in principal if they so desire. Most seniors, in their position would prefer to defer that interest and let the equity at that time pay the interest for them. We don't go on title and share in equity. We're nothing more than a lien on title, and the loan balance is growing if they're deferring that interest payment. So as I said before, if you've got an interest rate right now, or interest rates on fixed are in the low 3s, our adjustables are in the low 2, and you've got deferred interest on that, but the property is growing at 7 to 10% right now. Historically, it's been 7%. You still have equity growth over time versus the deferred interest. So with everything holding, you should still have equity in the property. So that negative that you hear is, oh, I did a reverse mortgage, and when I sold my property, I had no equity left. The math doesn't pencil. It shouldn't be that way, because there should be equity position there if things hold. So hopefully that helps. But a reverse mortgage is nothing more than a traditional loan in that idea, with a coupon, with a rate, with everything else. It's just a no payment option.
Thanks very much, Brad. Thanks for filling in while I got this technology working. So let's move forward with unlock purchasing power in reverse. We'll talk about several things, and one of the comments that was made in the very beginning, which I loved, was the generational wealth. That was thank you for sharing that, because that's so important. What is a reverse mortgage? The reverse purchase target market, some statistics and demographics, client and property eligibility, both the client and the property, there's eligibility. How the reverse mortgage works for realtors nationwide, scenarios, safeguards, and then some next steps. If you're a real estate professional and are not focused on the retirement market, you are missing out on assisting the largest demographic group of people in our history that will need housing choices for many years to come. And that's a quote from Lorraine Geraci, the head of our Learning and Professional Development Division here at Finance of America Reverse. Let's take a look at the opportunities for realtors and builders to assist homeowners with finding long-term housing solutions to age in place. We can learn about the reverse for purchase and can address the need for maturing adults to access appropriate and desired housing. And we're going to talk a lot about how this reverse, particularly the reverse purchase product, can assist with that. First of all, let's talk about an introduction to a reverse mortgage. What is a reverse mortgage? And you heard Brad talk a little bit about this. The HECM, which is a federally insured, so it's an FHA insured reverse mortgage, is available to homeowners age 62 and over. It allows the borrower to convert a percentage of home equity into cash or a line of credit or monthly payments, whatever they choose. So that's really reverse in a nutshell. It allows the borrower to convert a percentage of home equity into cash or a line of credit. We're also going to talk a little bit about Finance of America Reverse's proprietary Home Safe product, which addresses homes that do not meet the HECM criteria. And what is a reverse mortgage purchase option? Back in 2008, HUD actually approved the HECM for use for home purchase, and we had been asking for this for years. So we finally got this back in 2008. The HECM for purchase allows clients to purchase a new principal residence. The property must be the principal residence, using loan proceeds from the reverse mortgage along with a one-time contribution from the borrower. Real estate agents and builders can work together to partner to help borrowers purchase a right-sized property. So it might be downsizing, it might be upsizing. We call that right-sizing without the required monthly mortgage payment. Now, of course, the borrower still needs to be responsible for the timely payment of real estate taxes, hazard insurance, and other property charges, as well as we said, occupying the property as their primary residence. And what are some of the benefits for the borrower? The HECM for Purchase program is a great option for clients to purchase a new home without using all of their cash. We're going to talk about how they can save some of their proceeds from their previous residence, perhaps for their future retirement needs. So they can purchase a new home without using all of their cash or taking out a traditional mortgage. They can use the reverse purchase to finance part of that purchase price. And we're going to talk a little bit about how those calculations are done. And it significantly reduces the amount of out-of-pocket funds that the borrower may need to take. So for example, perhaps I'm a borrower and I come to you and I know that I'm going to list my house. So of course, I'm going to ask the realtor to list my house. The borrower comes and speaks with the realtor and says, well, I anticipate that I'm going to have about $500,000 cash in my pocket after my home is sold. That's going to be my proceeds. So right now you're thinking, okay, this is great. I have a cash buyer. However, what if I said that that may not be the best in the best interest of the client? What about if they could get that same $500,000 property, but only invest about half of their cash? Not only would you be getting the client in the home they want without the requirement of a monthly mortgage payment, but they could potentially retain half of that cash for their future retirement needs. In addition, given the same scenario, perhaps the borrower does want to use the $500,000 that they're going to get in proceeds from the current home. Maybe they do want to make that investment in the new property. Well, now they're not a cash buyer at a $500,000 property. Now they can buy even more. And we're going to talk about exactly how that works with allowing that buyer to purchase a higher value property with the cash they have. It truly is a win-win. So once again, the borrower can save more of their proceeds from the sale of their current home. So now they're preserving some of those assets for future retirement needs. They've got more liquidity. And at closing, as we said, they only bring the difference between the reverse mortgage proceeds and the sale price. And there's no monthly mortgage payments required, although the borrower can make a payment if they choose. And they do need to, of course, pay taxes, real estate taxes, homeowner insurance, or condo insurance, et cetera, as the case may be. And they need to keep those current at all times. There are no monthly payments, as we said, and the loan does not need to be repaid unless the borrower sells the property and moves away. The home is no longer the residence, the primary residence of at least one of the borrowers. The borrower does not meet loan obligations, as we said, such as paying taxes, insurance, or property maintenance. So let's talk a little bit about the reverse purchase target market.
Real quick before we go into this one, we run to a lot of things day in and day out. The real takeaway here is, seniors for us start at age 55. So we have a product that starts at age 55 called our Home Safe. FHA HECM Home Equity Conversion Mortgage starts at age 62. Now that age 62-year-old can be married to somebody younger. So we just need one of the spouses to be age appropriate, and then we can do what we call a non-borrowing spouse on somebody younger. So you could have a 62-year-old married to a 50-year-old, and we can still look at that. So the real takeaway is age 55 plus, we can look at a reverse mortgage for your client, either as a purchase or a refi. One thing we talked about here is purchasing power. In today's world, a lot of the seniors feel that they don't have the income or the FICO scores, or what might be needed for a down payment to do traditional financing. They might feel they have to do an all cash offer, and that might limit them to their purchasing power. So with a reverse mortgage, with a percentage down, they could increase their purchasing power. And I've seen that many, many times, to where the senior might only qualify for a $300,000 purchase. And with a reverse mortgage, we could qualify them for, a $600,000 purchase. That really opens up the market and more inventory for them to look at. We also see a lot of the seniors that are refining out of their existing family homes because it might be too much to upkeep. It could be a two-story. They want to move to a single story. Their family might have moved away, and now they want to sell and move closer to their family or in a senior community. So we're getting a lot of those seniors that are afraid to move or sell that property or list it because it's got deferred maintenance, and they can't do the upkeep, and they don't feel they can qualify to move closer to their family or into that senior community. A reverse mortgage really does help, as we talked about. It does what we call right size them into what their current situation is, or what's best for their current situation.
Thanks very much, Brad. And Brad doesn't realize it because he hasn't seen this entire presentation yet, but he just gave you a little tip as to what's coming later, because we have a little quiz for you. So Brad he just gave you a tip on that without even realizing. Let's talk about the demographics and the opportunity. The largest demographic group entering retirement in the United States today are the baby boomers. That's everybody born between 1946 and 1964. So everybody out there who's a baby boomer, raise your hands. Yep, I see all the hands going up. I'm raising my hand. Now they join the silent generation and World War II demographic groups who currently make up the older US adult population. And the 55 and over age group controls more than 3/4 of America's wealth. Boomers' median household income is 55% greater than post-boomers and 61% more than pre-boomers. So baby boomers have touched basically just every facet of our society along the way. And make no mistake, they are going to redefine retirement, and they're already doing so. By 2030, just under a quarter of the US population will be 65 and older. And perhaps the most staggering statistic is the size of the baby boomer group. If you haven't heard this before, I hear a lot of numbers kicked around, but the baby boomer generation encompasses about 78 million people. The amount of people turning 65 years old every day is about 10,000. So that's a pretty impressive statistic. This is a big group. It's an active group, a group with varying degrees of wealth and concern for longevity. And you are in a position to help them. Let's take a look at some more retirement statistics. 44% of retirees have a mortgage at retirement. That's going to be important in our discussion as we go along. Older Americans have about $2 trillion in debt, another topic that we're going to talk more about. 44% of average Social Security benefit is spent on medical expenses. Medical expenses are another big concern. And up to 74% of Americans intend to work past the traditional retirement age. And we know that as a generation, baby boomers have not adequately saved for retirement. So this is another place where the reverse mortgage as a whole can come into the planning arena. And this is just a map to show you where the increase in population in age 65 and over from 2006 to 2016. So you can see where the older population of our country is moving, what areas. And what are some of the realtor benefits of the reverse mortgage and knowing about the reverse mortgage? Retiring boomers are choosing to maintain a comfortable lifestyle in a home that better fits their needs. And that topic right there, that is something that we can talk about from many different perspectives, the home that better fits their needs. You heard Brad touch on that just a moment ago. This opens up a huge market of potential clients who can benefit from selling their current home, which maybe no longer meets their needs, right? It's the larger, older home. As Brad said, there might be some deferred maintenance, but basically it just no longer fits their needs. And they can purchase another home for their retirement, or as we like to say, for aging in place. So what are some of the realtor benefits? You're going to produce more sales, increase your listings, expand the inventory of higher value homes that your borrower can look at, right? They don't just have to be a cash buyer. You can work with home builders. Did you know that you can use a reverse purchase for to help the buyer purchase a new construction property? And as you heard Brad say, we're going to be able to increase the buyer's purchasing power and market to various types of communities, including maybe some 55 and over communities. And who might benefit? Who is the buyer who might benefit from a HECM for purchase? Someone who wants to upsize, downsize, or maybe they just want to move closer to family. Maybe they want to preserve the proceeds from the sale of their current home. We talked a little bit about that, being able to preserve some of those proceeds from the sale of their home for future retirement needs. They want to move to a low maintenance community where they don't have to be concerned maybe with yard work and exterior home maintenance. It could be appropriate for someone who lives on a fixed income and just doesn't want to be obligated to a mortgage payment, or they want to just increase their buying power. Someone who wants to purchase their dream home, and maybe they want a home that fits their physical needs. We talk about aging in place and moving to a property that meets their needs. What are some of the reverse mortgage liquidity benefits? Because really, when we talk about the reverse, we also talk about the liquidity. And aside from the fact that there are no required monthly mortgage payments on a reverse purchase or a reverse refinance, the reverse mortgage provides liquidity for retirement age homeowners. At a time when liquidity is needed as opposed to equity building, it's the only mortgage product that allows the use of some of the equity without mandating a monthly mortgage payment. Even though, of course, the client must still pay taxes, homeowners insurance, et cetera, the reverse mortgage and even Finance of America's reverse home safe loan is a non-recourse loan, meaning that only the value of the property at a maturity event is a requirement for paying off the reverse mortgage balance, not the client or their heirs. So no other assets are at risk, and the heirs are not responsible for repayment. And you're going to hear Brad talk about that a little bit. I know Brad's going to talk about some of these misconceptions. And as you can see, when we compare a conventional mortgage and a reverse, the conventional mortgage increases equity, where a reverse increases liquidity. Some of the differences are, of course, the reverse mortgage is age restricted. The person has to be a particular age to have a reverse mortgage, but no monthly mortgage payments are required. In both cases, the borrower, of course, still owes the home and is responsible for the payment of taxes, insurance, maintenance, etc. The reverse mortgage is a non-recourse loan, whereas with a conventional loan, there's a risk of foreclosure if the monthly payments are not made in a timely manner. Let's talk about the current adult client. We talked about how much they spend. They outspend the average consumer in restaurants, entertainment, and gifts. It's the fastest growing age group of gym memberships. That is something that some people often don't think about, gym memberships and things like that. They want to focus on retirement and their spouse. So it's, once again, it's a lifestyle. Where do they want to age in place? Do they want to live closer to their children? Do they want to live in a 55 and over community? And the current adult client also makes up 1/3 of the 195.3 million internet users. So that's another point that we often hear is, oh, older adults don't really use the internet. Yeah, they do. And of course, it's about lifestyle. And in addition to the spending trends of the baby boomers, they're very specific about how they choose to spend their time. So how do they spend their money and how do they spend their time? They will want their living environment to fall in line with their lifestyle choices. So as a real estate professional, when you're establishing a relationship with any client, aren't you trying to help them choose a property that they will feel amazing in? Just checking off a list such as, 3 bathrooms, 4 bedrooms. These are all things that questions that you might ask, but really, how do they feel when they are living in that home that they are going to be purchasing? Do they want to be close to family and friends? Are they interested in working and volunteering? We hear this a lot, that retirees will leave the profession where they've worked in for many years, but then they go on to take another job, perhaps in an area of interest, or maybe they want to volunteer. Are they looking for travel and an active lifestyle? Do they want a property that's maintenance free or energy efficient? Next, we'll take a look at client and property eligibility. Now, and we're talking about a HECM because you heard Brad say a little bit ago about the minimum age of 55 for Finance of America's home safe retirement mortgage, except in states where there are other minimum ages, but that could be 55 for that particular product. But for the HECM, we're looking at 62 years or older, a U.S. citizen or lawful permanent resident. The borrower would be the primary borrower occupying the property. as the primary residence. The borrowers would receive counseling, and that includes all borrowers and non-borrowing spouses, and they must maintain the property obligations, which we talked about: real estate taxes, homeowners insurance, maintaining the property, etc.
Real quick, what I see a lot of seniors doing right now is what they'll do is do a reverse mortgage on their current primary property. And they will either what we call right size, but what I also see them doing is taking the equity from their current property and buying, using that cash to then go buy a second home. So they can have multiple properties. It's not just, oh, what we're asking is the reverse can only be on the primary residence, but they can go out and buy that second house or that second place or investment properties. So we are using or seeing a lot of the equity being used to go buy more real estate to increase their what we call portfolio. So yeah, you can do second homes. We can use the reverse mortgage not to get the second home, but reversing the primary residence to get the equity and then buy another property. So we see that quite a bit as well.
Thanks very much, Brad. That's very important. Thank you for bringing that up. Let's take a look at the types of properties that are eligible for a reverse. So the property being purchased must meet Federal Housing Administration property standards and be one of the following property types: single family, 2 to 4 unit, HUD FHA approved condominiums, manufactured homes that meet FHA standards, and you see that there on your screen. Brad, do you want to take a moment and talk about the 2 to 4 unit properties and the benefit there? Because what you just said kind of ties right into that.
Well, it's kind of funny. One of my things when I'm 62 is that I think I'm going to buy a 4-unit property with a reverse mortgage. And my idea is that if I'm buying a 4-unit property and I live in one of the units and I rent out the other 3 units, that then I would have, income producing properties on a reverse mortgage with no mortgage payment, along with the idea that equity will continue to increase versus my interest payment. So yeah, you can look at this not only, like we said earlier, this is not a need-based program. Yes, it can solve that problem for a lot of the seniors, but this program can be used in so many different ways to increase their life estate, to improve their quality of life. So utilizing equity is not a bad thing. We talked about before, they were talking about internet usage. When I started in 2006 selling reverse mortgages, counseling had to be face-to-face. I had to go face-to-face. That's the way the seniors wanted to operate. Now they DocuSign, counseling's over the phone. A lot of things are done in traditional finance, the way you guys do your traditional financing. The same way for the new seniors, they understand leveraging. They understand how to utilize their equity to work for them. So the idea of I'm not going to sit here and refinance into another 30-year fixed when I'm 80 years old. What's the point of that? You're not going to get to that point. You're financing this property. So they understand financing. They understand utilizing the equity. And a reverse mortgage only assists them in multiple ways. It just depends on us finding what the need is or the long-term, what I call the short-term, long-term benefits to the client.
Thanks, Brad. Next, let's take a look at the types of properties that are not eligible for a reverse mortgage. You heard Brad say you can't purchase an investment property or a vacation property with a reverse mortgage, but you could, the borrower could pull cash out of their primary residence with a reverse and then purchase those properties. So a bed and breakfast is also not eligible. Properties with illegal accessory units, mixed use property with more than 49% commercial use. That 49% is important to remember. Co-ops are not eligible, nor are single wide manufactured homes. And next, we'll talk about how the reverse mortgage works for realtors.
A realtor named Sarah attended FAR's class, Unlock Your Purchasing Power in Reverse, and now she's got a basic understanding of how someone can purchase a new home using a reverse mortgage. She knows that while the program may not be for everyone, it clearly has value for people entering or enjoying retirement, especially in situations in which the home they want to buy doesn't match what they have to spend. She wonders if the reverse purchase program could open up possibilities for her 70-year-old retired client named Richard. Richard would like to sell his existing home and buy a new home that better fits his needs as he ages. He will net about $300,000 when he sells his old home. He would like to pay cash for his new home as he is retired and does not want a mortgage payment. Sarah has shown him 17 houses in his price range, but none of them has impressed him. Richard is frustrated. He needs a single-story home, but he's not finding anything he likes in his price range, and he's not willing to consider a mortgage payment as an option. If Sarah doesn't come up with a solution and fast, she may lose out on 2 transactions, listing his old home and selling him a new one. Sarah consults with Carol, her trusted reverse specialist at Finance of America Reverse, who will be incredibly important during the reverse purchase process. Carol can run numbers in her system to see what home value Richard might be able to afford using the reverse purchase. Carol asks Sarah for pertinent details such as Richard's age, home location, and available monetary contribution. Carol tells Sarah that this may be the perfect solution for Richard. In Richard's example, he'll get $300,000 from the sale of his old home to contribute to the purchase of the new one. With an assumption of a 3.63% expected rate, 5% closing costs, and a 2.28% margin, Richard would comfortably be able to buy a $500,000 home. He will receive $253,600 after closing costs from the reverse mortgage and have to contribute $246,400 from the proceeds of his prior home sale. That works out perfectly because he should be netting $300,000 from the sale of his old home. So he will have what he needs to put down on the new home and still have a little left over to help with moving expenses. Sarah tells Richard she has a solution that will allow him to get the ranch home that he wants and keep his financial security by not requiring a monthly principal and interest payment. She puts Carol in touch with Richard to get the official pre-approval. Sarah will continue to partner with her trusted FAR reverse specialist, Carol, throughout Richard's reverse purchase loan process.
So that's just one example of how the reverse for purchase could work. And let's take a look at some of the calculations that are done so that you can understand how we arrive at these numbers. We use what's called the principal limit, and that's the maximum amount that's available to a HECM borrower at the time of closing. The principal limit is calculated using tables provided by HUD. So this is a HUD calculation. And the factors that go into determining this principal limit are the age of the youngest borrower or eligible non-borrowing spouse, the product type, and what we call the expected rate. Those factors all go into that HUD formula to tell us how much proceeds that borrower is going to get. And we use the maximum claim amount, which is either the lending limit, the appraised value, or the purchase price, whichever is less. So it could be any of those. And that's how we determine the amount that the borrower is going to be eligible for. The reverse mortgage proceeds are calculated, as we said, using the youngest borrower or the non-borrowing spouse, eligible non-borrowing spouse, the expected rate, and the purchase property value. The borrower contribution, think down payment, we call it their one-time contribution, is the difference between the purchase price of the home and the proceeds of the reverse mortgage, right? So that makes sense. The contribution must come from the buyer's funds, such as the sale of the current home or other sourced funds that the borrower may be putting toward the transaction. But generally, it's going to be from the sale of the borrower's current home. Although one time, many years ago, I actually did a reverse for purchase transaction for an 80-year-old borrower, and she was a first-time home buyer. So that was a really interesting transaction. Now let's take a look at, remember I said Brad gave you a little tip without even knowing it. This is just an example table of the approximate contribution that the borrower would need to make toward the purchase. So let's just take one example. And if you want to, you can, if we have access, people can type into the chat pod if they want to give us their estimate of what their guess of what the answer might be. If we have a 70-year-old borrower and they have proceeds from their current home being sold, so they have those proceeds, they have those cash proceeds coming in, so that's the contribution they have available, let's say they have $330,000 coming in proceeds from their current home sale. What is the purchase price of the new home that they could buy with a reverse mortgage? So what we would do is we take the borrower's age 70. We know that they have $330,000 coming in proceeds from their current residence. So as we look at the chart, if they were to purchase a $600,000 property, they would need to put in approximately $326,400. So a borrower who's netting $330,000 from their current home at age 70 could possibly purchase a $600,000 property using a reverse for purchase product. And that's just an example, but I wanted you to see how that works. Brad, do you have any comments on this chart?
No, I mean, it does a great job just for the purchasing power of, especially with inventory low, this really opens up different ideas to the seniors. What can they qualify for, then opens up some of that inventory, because I know out there we have a shortage in inventory. So.
Next, we'll talk about the costs of the reverse mortgage, the closing costs. The financed closing costs, and remember the costs are financed into the loan. They're not out of pocket. The upfront mortgage insurance premium, which is 2% of the max claim amount up to the lending limit. Origination fee, depending on the loan product, and we'll talk a little bit more about the different products. And traditional third-party closing costs. So that's what typically makes up the costs of the reverse mortgage upfront, the financed closing costs.
Now, one of the questions we had was, can you do a reverse mortgage on a free and clear property? The answer is yes. You don't have to have a loan balance or something to pay off. So you can utilize a reverse mortgage in that scenario. A lot of the seniors with free and clear properties would just do what we call our adjustable rate mortgage. They'll take a certain amount out if they want to, or they would all leave it in a line of credit. One of the benefits of a HECM or even our Home Safe Select product is it's an adjustable rate. Sure, the rate's low, that's great. But the benefit really is they get additional funds through a line of credit, and the senior's not charged interest until they draw from that line of credit. It's a better option than what a lot of seniors are doing right now, going out and getting a home equity line of credit. A home equity line of credit obviously would have a payment to it. It would have a term to where it would balloon after 10 years, and it can be frozen if the market were to change, as we saw in 2008. With a home equity conversion mortgage, our line of credit has a growth rate to it. So independent of the market value, that line of credit will continue to grow over the senior's lifetime. There is no payment and it cannot be frozen. So it's a much better option for the senior. And we see that a lot with free and clear properties where they don't want to refinance into another loan and have that payment and restart that interest. What they would prefer to do is just get access to the equity, and this is a way to do it.
Thanks very much, Brad. Yeah, the line of credit option is just a great planning strategy over the long term. Here you see on the screen the ongoing obligations, and we've already covered most of this, but the borrower must occupy the home as his or her primary residence, pay the property taxes, homeowners insurance, and any other property charges such as flood insurance, HOA dues, condo dues, etc. Now we're going to take a look at some scenarios and examples. Now this one is going to talk about a reverse for purchase, but downsizing. A 70-year-old couple sells their home for $500,000 and purchases a new home for $350,000. So they're purchasing a lower priced home, and they could pay all cash for their new purchase, but they want to retain some of those funds for their retirement expenses. So if we take a look at this, you see downsizing without a reverse for purchase. We have $500,000 in their departure residence, their current residence. That's what they're selling it for. We take 8% closing costs off the top, which leaves them net proceeds of $460,000. Their new home price of $350,000, and that leaves them $110,000 left over after they purchase this home. So not bad. But how about downsizing with liquidity with a reverse for purchase? Same scenario, $500,000 sale price of their current home, $40,000 in closing costs off the top, leaves net proceeds of $460,000 once again, new home price of $350,000. If they did a reverse for purchase, the reverse for purchase would bring $155,500 to the table, which requires them to only bring $194,500 of their net proceeds of $460,000. So they now have saved $265,500 after the sale of that home and after the purchase of their new home. So they have more funds to save for their future retirement needs using that scenario. Next, let's talk about a 70-year-old couple who sells their home, once again, for $500,000, and they want to purchase a new home for $650,000. They have told their realtor that they do not want to have any monthly mortgage payment requirements. So if they don't use a reverse for purchase, this is upsizing without a reverse for purchase. They have a sales price on their current home of $500,000, $40,000 in closing costs taken off, net proceeds once again of $460,000. So a new home price of $650,000 would mean that they would be required to bring $190,000 to the table to complete this purchase. If they were upsizing with liquidity using the reverse for purchase program, the sales price of their current home, once again, $500,000, $40,000 closing costs, net proceeds of $460,000, the new purchase price of $650,000. In this case, the reverse for purchase is bringing $287,000 to the table. That's reverse purchase money. The contribution out of their net proceeds of $460,000 only needs to be $363,000. So what they've accomplished here is they've purchased a home at a higher value. They do not have a monthly mortgage payment requirement, and they have saved after they've closed, they still have preserved $97,000 out of their $460,000 in proceeds. So they have increased their liquidity and purchased the home that they wanted. A 65-year-old man wishes to purchase a new home without incurring a monthly mortgage payment, and he's looking at a property worth $1.8 million. You heard Brad talk about the Home Safe product. If we have a sales price of $1.5 million of the current home, closing costs taken off the top, leaves net proceeds of $1.38 million. But this borrower is looking at a new purchase price of 1.8 million. So they would need to bring $420,000 to the closing table. In a reverse for purchase scenario, once again, the current home is valued at 1.5 million, $120,000 closing costs, leaves net proceeds of 1.38. The new home price, once again, is 1.8 million. The home safe for purchase proceeds are $682,000. So that means that this borrower, out of their net proceeds of 1.38 million, needs to bring 1.18, leaving them $262,000 in liquidity that's been preserved. So this borrower can buy a higher value home using the home safe for purchase with no required monthly mortgage payment and still have preserved some additional liquidity for retirement needs. And of course, these are just examples for illustration purposes. Now let's talk about, you heard Brad talk about the 2 to 4 unit. That's his particular strategy. A 60-year-old couple wishes to purchase a new multifamily home without incurring a monthly mortgage payment. Their goal is to collect rental income from the other units in the home. So proceeds from sale from their current home, $500,000. The new duplex cost is $700,000. So typically, if they were doing a regular purchase, they would have to bring $200,000 in either a conventional mortgage or a cash contribution. And they would have, let's assume that they were doing a regular conventional mortgage. So they'd have a new mortgage of $200,000. Their mortgage payment on that amount would be $955 per month as an example. And their rental income is $1,500 per month. So they would be having additional cash flow of $505 per month. Using the reverse for purchase, once again, they have purchase proceeds from the sale of their current home of $500,000. The new duplex costs $700,000. The reverse for purchase proceeds of $283,800. And once again, these are just examples that we're using for illustration purposes. The borrower of their $500,000 needs to contribute $416,200. Now they have no monthly principal and interest payment required. Of course, they're responsible for the property charges. They now have additional cash flow of $1,500 a month, because remember, that's the rental income that they're collecting. And they have additional funds available from the proceeds of the sale of their previous home. So in this case, we are increasing their cash flow and preserving some of the proceeds from the previous home. And a reverse to refinance to purchase an investment or vacation property. A 74-year-old woman wishes to purchase a vacation home without incurring a monthly mortgage payment. And you heard Brad talk about this. Let's take a look at this. $120,000 purchase price would typically require a down payment of 20%, so $24,000, which makes the mortgage amount $96,000. And the borrower would need to bring to closing the down payment plus closing costs. With a reverse refinance, now this would be the situation where we're refinancing, we're doing a reverse on the borrower's current primary residence. The purchase price of the vacation or investment property is $120,000. The reverse proceeds, though, based on the home that she lives in now, she can actually get $220,000 in a reverse refi based on the scenario that we were using with her current home. So she's now a cash buyer for this reverse, for this purchase of the vacation or investment property. She's now a cash buyer for this $120,000 property. And in addition, since she was eligible for $220,000, she's got a line of credit. You heard Brad talk about that line of credit option of $100,000 available for her. So that's just a different way of looking at it. So she's able to pay, or she's able to purchase her vacation home without incurring a monthly mortgage payment requirement, and she has a line of credit established for future needs. One of the other scenarios that we're seeing is in a divorce situation. We call it, you might hear it called silver divorce or gray divorce. Betty and Ralph are age 68 and 72 and divorcing after many years of marriage. Their home, when sold, will provide about $750,000. The challenge for the divorce attorney is how to effectively provide housing for each separating party without draining the investment or retirement assets of those parties. So let's say we said the home was going to be sold and net about $750,000. So we would assume that that's divided evenly between the parties. So each party now has $375,000, but they each need to find a place to live, right? So with a reverse purchase in a divorce situation such as this, the realtor may be able to help both parties each find their own residence. If this were done in a cash situation, new home price of, for example, of $475,000, the divorce settlement netted each individual $375,000. So each party would have to come up with $100,000 from their savings or other investments, which may not be the desired outcome. However, if each party were to look at a reverse for purchase, once again, $475,000 purchase price, $375,000 each from the divorce settlement, the reverse purchase proceeds, once again, that number is calculated on the $475,000 purchase price. That would net each individual $266,950. Once again, just an example for illustration purposes. But out of the $375,000 that each party has, they're now able to each purchase their own separate residence using a reverse mortgage, and they each now have preserved $166,950 in liquidity for future needs. So that's just one more example of how a reverse for purchase can be used. And once again, we talk about this, the silver divorce trend. In the past 25 years, the rate of divorce has been on a decline in the 25 to 39 and 40 to 49-year-old age brackets. However, among those age 50 and over, the divorce rate has roughly tripled since 1990. So this could be a real need for couples who are divorcing, where each party needs to identify a new residence. Let's talk a little bit about the safeguards. And I know, Brad, you wanted to talk some about the misconceptions of the reverse mortgage. Do you want to take a minute to talk about that?
I think we've already hit a lot of it. We've talked about non-recourse loans. So therefore, the debt cannot be passed on to the heirs. They can never owe more than the value of the property. So those are nice safeguards there. We've spoken about the non-borrowing spouse, where in the past you would take the younger spouse off title to get a higher LTV, or what we call principal limit. You're no longer able to do that. So the younger spouse now stays and protected by the reverse mortgage. So that prevents that foreclosures that were happening because of that. We also allow what we call a LISA, a life expectancy set aside. You guys would think of it as an impound account, where we can now use proceeds to pay taxes and insurance. So we're not seeing those tax defaults that we were having before. So FHA has done a really good job over the years to clean up this program and to put a lot of safeguards in place to protect the seniors and make sure that they're going to be able to age in place.
Thanks, Brad. So we talk about the mandatory counseling. You heard Brad talk about the LISA, and that's in conjunction with the financial assessment. And financial assessment was implemented to help the borrower make sure that this is really a good long-term solution. We talked about the non-borrowing spouse protections, the non-recourse, and of course, there's no prepayment penalty. The borrower can make a payment anytime that they choose. And the reverse mortgage does not need to be repaid until all the borrowers pass away or leave the property. It can be repaid through the sale of the property or other assets, such as proceeds from a life insurance policy, or if the heirs want to keep the property, they can certainly do a refinance and keep the property. Because of that non-recourse feature, no debt is passed along to the heirs, and there's no personal liability. And sometimes we hear that the adult children may be against the reverse mortgage, but that's really not the case. And I think it actually opens up an opportunity to have that discussion about the benefits of the reverse mortgage. And of course, if there is equity remaining after the loan is repaid, that remaining equity belongs to the homeowners or the heirs. And family members may obtain a short payoff for 95% of the current home value with a post-death transfer, as long as certain conditions are met. And what is the Realtor Advantage? Separate yourself from your competition by knowing about the reverse for purchase. So once again, thanks everyone for taking time to learn about this product today. Increase your earnings with this life-changing program while increasing the quality of life for your older adult clients. And the reverse for purchase truly can be a great alternative. And now you can use your knowledge of the reverse for purchase product to give your clients strategies to relocate, be near family and friends. We talked about upsizing or downsizing, certainly increasing their purchasing power, maintaining an active lifestyle, boost the retirement funds and liquidity, and create financial longevity. So review your book of business. Are there any clients that you have not been able to help? Any older adult clients that you have not been able to help? Are you familiar with the SRES, which is the seniors with an S, real estate specialist designation? You may want to look into that, and certainly partner with a specialized reverse for purchase loan officer. And thank you very much for your kind attention today. And Brad, I don't know if we have any questions.
Yeah, let me know, guys. If you guys have any questions, we're here to answer them. We do really try to make it easy, so just reach out, to the correct people, and whatever you need, we're here to help.
Pamela, Opie, I think you have some questions, if I'm not mistaken. Pam? Maybe you guys answer these. I know she had some questions we talked offline. I guess that wraps it up. Sean, is there anything you want to add? Sean's on a call.
Well, I mean, just remember, I mean, the easiest thing now that you have an idea of reverse mortgages, keep in mind the opportunities. Opportunities are being prepared, right? Not opportunity wasted, but opportunities, meaning being prepared for that opportunity. Now, having an idea of what a reverse mortgage is and how you can help seniors out there, this is an opportunity. So you're prepared for it, understanding what that is. Anybody of age 55 or above, we do have products that can assist them in either refinancing or on a purchase. So now it just comes down to running the numbers and pricing and figuring out the qualification.
And it looks like we do have another question.
Once you sign for reverse mortgage, as you age, can you revisit other changes, opportunities? So yeah, we refinance people out of reverse mortgages, yes, we can.
Yeah, right now, heck-em to heck-em refis are a big deal because values are up. People get older, rates are down, you know, everything's constantly changing, right? So yes, you can refinance an existing reverse mortgage into another reverse mortgage if there's a benefit. And a lot of benefit today is higher values, so they're getting access to larger lines of credit. We have lower interest rates. When I was writing reverse mortgages, our fixed rate was 5.06. Now we're at 3.06. You know, so you have a lot lower rates, and there's a lot of benefit there to rewrite those. There is no prepayment penalty in a reverse mortgage, so they don't have to worry about getting into the reverse mortgage, not enjoying it. They can refi out of it if that's an option. So there's no prepayment penalties to this. Anything else? Well, thank you guys for taking, you know, the time today to learn about reverse mortgages, and you know, information is power. So please utilize this information, and please go out there and assist any seniors that you run across. They might be, you know, frozen. They just don't know what their options are, and they might be what we call house rich and cash poor. A reverse mortgage is an opportunity to assist them to better their current retirement strategies. So we're definitely here to help.
Thank you very much. I appreciate you guys.
All right, thanks guys. Have a wonderful day. Thank you.